We've probably bought 30 million ounces of silver for our trusts in the past year. We may be the largest physical buyers of silver in the world this year. So that means we get pretty good service in the market and we have pretty good market intelligence. But actually, the wholesale market, while there aren't real shortages, has become much tighter in the last 6 or 7 days than it was before. I don't know really what that's due to, except perhaps aggressive physical purchases.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Rick Rule, the president of U.S. Sprott Holdings. Rick, thank you so much for joining us today.
A pleasure.
Fantastic. Now, first, I'd just like to talk about you and your career. Your prolific career is not coming to an end. It's taking a different direction. So please tell us a little bit about this.
I was going to say, after that introduction, I was going to correct you and say, as of the next 9 days, the president of Sprott U.S. Holdings. But at age 68, I've decided, frankly, to stop doing things that cause me aggravation and start doing things that cause me joy. The conventional term for that, I guess, is retirement. But the truth is I'm not retiring. I'm redirecting. I am resigning all of the positions within Sprott that require administrative, corporate management responsibilities, something which, frankly, I don't do well and something which I despise. I am, too, giving up all positions within Sprott that would require FINRA regulation. Beginning on March 15th, in discussions like this, unconstrained by federal regulations, you'll find me substantially more candid than I've been for the last 5 years, and I hope that amuses you. I will continue as a director of Sprott. I'll continue as the largest shareholder of Sprott. I'll continue as the largest private client of Sprott, and I will continue to manage certain Sprott-branded products where I'm the largest investor. What I won't do is be president of the U.S. business or be responsible for any regulatory interface, which is something that I should have given up perhaps at birth.
Fantastic. Well, it's great to hear that you'll still be around and sharing all your insights with everyone. And that's really why we want to have you on today, is really to get an insider perspective in the gold and silver markets. It's been crazy the last month now. It's really been a month since this whole silver squeeze thing started at Miles Franklin. We've seen demand like we've never seen before. And you have an interesting perspective on this, because I know the Sprott has been impacted by this. The PSLV has been. What are you seeing currently at Sprott?
Well, my perspective has changed a little bit. You know, had we had this discussion 6 weeks ago, I would have said that the market is tight with regards to retail denominations of silver, which is to say ounce product, 10-ounce product, even kilo product. But at the institutional or wholesale level, we experienced no shortages. Now, in fairness, we've probably bought 30 million ounces of silver for our trusts in the past year. We may be the largest physical buyers of silver in the world this year. So that means we get pretty good service in the market and we have pretty good market intelligence. But actually, the wholesale market, while there aren't real shortages, has become much tighter in the last 6 or 7 days than it was before. I don't know really what that's due to, except perhaps aggressive physical purchases. For us, given that we buy physical silver and we throw it in the Royal Canadian Mint, the most convenient silver for us to buy is in Ottawa or Toronto. The next most convenient silver for us to buy is in Chicago, which is a fairly short truck haul to Toronto or Ottawa. The third most convenient is NYMEX, in New York. And we have had to go, frankly, farther afield in the last while to buy silver. So I would have told you 6 weeks ago that a lot of this activity was, from the point of view of institutional suppliers, flash in the pan. But this flash is certainly brighter than prior flashes I've seen.
What is your perspective on why we're seeing all this demand? I mean, obviously there's this thing that started on Reddit, right? A really push to buy silver. The thing that confuses me and a lot of other people is why we're seeing all this demand. You're saying it's harder and harder to get silver, but the price, if we look today, it dipped below 26. It hit 25.11, I think. So it seems like the price isn't really being impacted. If anything, it's falling.
I think in the near term, what you say is true. My own suspicion has been, and you've probably heard me say it in other interviews, that the ability of a group to, in effect, corner the silver market, which the Hunts tried and failed to do, is difficult. The market capitalization, particularly if you include the futures market, of the silver's market relative to the GameStop market is an order of magnitude different. GameStop was a pimple compared to the size of the silver market. And so my suspicion has always been that the dealers, the big dealers on the futures market, would let the demand come in, let silver rise a little bit, fill the futures demand, and then teach the kids a lesson. And that may be what's happening. But at the same time, the kids have taught the market a lesson too. Several million people became interested in silver. Most of them will drive on and find some other narrative that catches their fancy. But some substantial number will be left behind. And some of the people who became interested in silver as a consequence of the momentum, or as a consequence of what I call the kids, will stick around the silver market too. And the silver market will be better for it. More liquidity, more players, more interest long and short, all of that's good. The other thing that I think might happen, Elijah, emphasize might, don't use this as clickbait, this is an old man fantasizing, is that the incredible demand that we've seen for silver in the last 4 or 5 weeks might wake up the risk management departments of the big banks. For a very long time, the silver market has been very odd in the sense that the tail, which is the futures market, wagged the dog, which is the physicals market. In other words, the derivatives were so large relative to the asset class that the derivatives drove the market rather than the asset driving the market. There have been many days in the futures market where futures volume has exceeded the amount of silver available for good delivery by up to 200 times. This is daily, by the way, not weekly, not monthly. Were I personally running the risk management business of a very large bank, perish the thought, the idea that I had a position which in the wrong set of circumstances couldn't be covered would give me real pause. And I think one consequence of what we have seen, in addition to the fact that the silver market will become for years broader as a consequence of all the people who have been introduced to it, I think the other consequence might be that the amount of silver that is considered by the industry necessary for good delivery will increase. And I think that's a very good thing. Will silver markets continue to be manipulated? As you know, Elijah, I am not one who believes that there has been a thoroughgoing, ongoing, decade-long conspiracy. But all markets are manipulated on a short-term basis. The idea that you have a market like silver where on a daily basis the futures contract trades 200 times the available physical supply means that it would be fairly easy for sophisticated players to ladder positions in the futures market and then assault the physical market, which is fairly thin, and by assaulting the physical market, see the physical market change the futures market. The idea that you see these midnight sales in silver, where people sell large quantities of silver during the period where there is the least possible demand, tells you that they're not trying to profit from the silver trade. It tells you that they're trying to jack around the futures trade. And to the extent that the futures trade becomes less leveraged, the ability of desks to do that diminishes. And I think we're coming into a period where that's true.
What you mentioned is really interesting because we want to get on this channel all people's perspectives on this story of silver manipulation, right? And your perspective is, yes, markets are manipulated. The silver market is manipulated, but it's kind of individual instances. It's not this grand 2-decade long conspiracy to suppress the price. Am I hearing you right there?
You are. That'll get me all kinds of hate mail on your channel. My own experience earlier in my working career, working in very large financial services institutions, is that the chance that there was a very long trade that involved paying rather than receiving interest, that is to say, a trade that wasn't a carry trade, something that reduced quarterly cash flow in the quarter that occurred, which meant it reduced quarterly cash bonuses, didn't occur. It just did not occur. Those businesses are run not for shareholders, but rather for quarterly cash bonuses. And I don't believe that any activity goes on in a great big financial services institution that reduces quarterly cash bonuses to the guys in charge. The idea that the government could somehow manipulate the price of silver over 10 years or 20 years seems far-fetched to me too. These guys can't educate the kids. They can't deliver the mail. They lost the war on drugs. They lost the war on poverty. They lost the war in Vietnam. They're going to lose the war in Afghanistan. How on earth could this group of morons successfully manipulate silver markets over time, particularly when markets, precious metals markets, were for many years going down of their own volition? I think what you'll see now with the direction in precious metals prices going higher, not this week, not last week, but broadly higher, will be that silver markets will again be manipulated, but they'll be manipulated in an upward direction. I think what you'll see is leveraged long as opposed to leveraged short positions in the futures markets. And I think you'll see bull raids in the physical market rather than bear raids in the physical market, because manipulators always do what's easiest. I remember, in fact, in the 70s, watching physical markets and thinking, boy, the traders are having their way with this market. But they had their way with the market in the upward direction, not the lower direction. Finally, and you may not remember this, in our last discussion, Elijah, I said that in my experience, and there's no guarantee that passes prologue, but in my experience, precious metals bull markets begin with gold, and silver begins to move mid-market and really moves later market, but silver moves further and it moves faster. So the circumstance that the silver price didn't move until the gold price had moved is not at all uncommon. And I suspect, for reasons that we can describe later in the interview, that the wind will come back into precious metal sales, that this bull market in precious metals, despite the plateau and then decline that we've seen recently, is by no means over.
You have noted in the past that really what we're seeing right now in precious metals, even though we are seeing this decline, if we look at the longer term view, we're actually in a very, very bullish spot right now. And we have already seen a huge increase in price. So I guess if you can kind of share that perspective with our viewers, because I think that's something that's missed. You said that, investors have expectations, right? And sometimes markets don't align with those expectations. Investors often have expectations that are unrealistic. But if you look back, really, precious metals have gone very high recently and will probably go higher, but maybe not in the time frame that they're looking at.
Well, what you say is very wise. It's odd that investors believe that either their paradigms or their wants are fundamentals. They're nothing like that. They're the cause of torment. Look, a lot of people new to the business have emailed or called me and said, Rick, the gold price has gone from $1,000 to $1,900. Have I missed the move? Or we're 3 years into this market. We're 3 years into a bull market. Have I missed the move? I don't make any guarantees, but I've been through two prior precious metals bull markets in my life, 1970 to 1981 and 2000 to 2011. 10-year, 11-year markets. In the least dramatic, the 2000 to 2011 bull market, the gold price moved from $253 an ounce, if my memory serves me well, to $1,900 an ounce. Real precious metals bull markets have a duration and a dimension that's lost on people who haven't been through them. I have. So when you observe history, you think this one has further to go. In fact, a lot further to go. When you ask yourself, why might this be true? does history need to repeat itself? In my experience, again, the thing that's the primary determinant of the gold price is society's faith or lack of faith in conventional savings instruments denominated primarily in US dollars. Anybody who doesn't have their faith in savings instruments, which are denominated in US dollars, anybody who isn't concerned about that today is somebody who doesn't read or doesn't think. We've discussed this too, quantitative easing, which has broad bipartisan support. If Elijah did it, it would be called counterfeiting, and you would be interviewing me from a jail cell. Debt and deficits, the idea that you strengthen a borrower's balance sheet by making them overly encumbered is a little silly, isn't it? And at the federal level, we have in excess of $160 trillion net present value of on-balance sheet and off-balance sheet liabilities. But the most important is interest rates. Negative real interest rates are not a force of nature. They're an artificial construct of man. Think about a negative real interest rate. When your government borrows from you for a U.S. 10-year Treasury, they pay you 150 basis points in a currency that they say is depreciating by 160 basis points. For the first time in your young life, they're telling you the truth. What they're saying is that if you give them money now, they'll give you back less in 10 years. Jim Grant calls this return-free risk. Interest is the reward that you are supposed to get for saving, for deferring expenditure. And it's also meant to shield you from the time value of money and also from credit risk. A negative real interest rate is silly. It is absolutely no surprise that gold did well during a period where the interest rate on the U.S. 10-year Treasury fell from 200 basis points to 60. It also makes absolute sense that gold would do poorly when the U.S. 10-year interest rate went from 60 to 140. Keep your eye on the U.S. 10-year interest rate, and you'll have a very good sense, I think, where the gold price is going. My own belief is that the Fed is using a liquidity-driven bump in the U.S. economy to allow the interest rate to rise so that they'll have ammunition to cut it later if they need it. My suspicion is, too, that as the 100 basis point increase in the U.S. 10-year Treasury, which is the benchmark credit instrument in the world, percolates through to other credit markets, which is to say if the U.S. 30-year mortgage interest rate increases by 1% or 1.25%, if auto loans increase by 1 or 1.5%, if the prime lending rate to major industrial corporations goes up by 150 basis points, and most importantly, if the debt paid on the rollover of federal, state, and local obligations in the short term becomes unaffordable as a consequence of interest, that is to say, if the consequence of the increased interest rate rolls through the economy, you'll see the interest rate come off again, if the Fed can do it, like a boulder off a bridge. And then you will see a gold market get underway in earnest again.
What I'm hearing is that, yeah, the fundamentals are as strong as ever. And really getting back to what we talked about at the beginning of this interview, this whole silver squeeze has really, it seems like, increased your bullishness for the precious metals because it's introduced so many new people. I guess to wrap up this interview, did you want to kind of expand on that? I guess the long-term effects of this silver squeeze.
I would have told you earlier that it was inconsequential. And I was wrong. I have always been a fan of distributed information, peer-to-peer information. When I was your age, information came to us from on high. If it was information about society, it came from academia or the government. Maybe it came from major news channels. Maybe it came from the Wall Street Journal. Maybe it came from investment banks. But information now is broadly distributed. Elijah Johnson can compete with the Wall Street Journal. I mean, you can't beat them, but they can't beat you either. And information is peer-to-peer, which is, over time, hugely beneficial. I'm not saying that these Reddit youngsters aren't going to get spanked. We all got spanked learning. They're just learning from each other rather than being, full force-fed BS from above. And that's all great. For the metals market, it's great too. The metals market has wondered for 30 years how they could address young people. Well, we sat back and technology let young people address us. We didn't find them, they found us. And the introduction of young people to the precious metals narrative, I think, is going to be beneficial both to the industry, but more particularly young people. If you, Elijah, think about what the federal debt really is, it's an income transfer from you to me. My generation voted ourselves all these cool benefits: Medicare, Medicaid, Social Security, great roads, all this kind of stuff. We voted ourselves all kinds of cool stuff, except we decided not to pay for it. We just added up a bunch of debt. Interestingly, young folks like you are interested in voting more benefits like this, which old folks like me are going to get, and you all are going to get the bill. And when I describe the precious metals thesis to young people in the context of it being a mechanism by which you can defend yourself against me, suddenly what was heretofore a very dry topic becomes of immediate interest.
That's really interesting. Can you expand a bit on that? How are precious metals a defense against, others maybe taking your wealth? Or can you expand on that a bit more?
Yeah, I think there's two ways out of a circumstance where a society owes itself $160 trillion. And by the way, we don't owe it to ourselves. The savers, or pardon me, the spenders owe it to the savers. But let's leave that aside. There's a $160 trillion obligation, and we service that with the national income, which is to say taxes and fees less expenses. The problem is that the national income is negative. It's upside down $3 trillion a year. There's only two ways out of this, okay? Two ways out of this. One would be a good old-fashioned default, where people your age, when they get to the ballot box, say, you guys voted yourself all this stuff. You pay for it. We're going to stiff you. No more Medicare, no more Medicaid, no more welfare, no more Social Security. Times are tough. We quit. Strong letter to follow, right? Politically, maybe a difficult thing to do. The other way out of it is what we did in the 1960s and early 1970s, which is to say we debased the value of the obligations. If $160 trillion all of a sudden has a net present value of $80 trillion because you halved the purchasing power of the currency, then you have had what's in effect an informal default. All of your dollar-denominated savings have half as much purchasing power. And traditionally, the way that societies have protected themselves against the diminished purchasing power of their savings is to have part of their savings in a medium of exchange that can't be devalued, which is to say precious metals.
That's a really interesting perspective. Yeah, that precious metals are insurance, but protection against that devaluation of the currency that is really led on by policies in the past, going into debt and all of that. Well, Rick Rule, we really appreciate, all the insights and wisdom that you've shared with us. And we really appreciate, your prolific career, right? That's led to all of this. And we really wish you the best in your retirement, right? It's not 100% retirement, but we wish you the best. And before we let you go, where can people find you? How can they, if they're interested in contacting you? And I know the portfolio ranking that you do, if that's still a possibility.
Well, that's still my favorite. I love having discussions like this with investors. And the best way to keep the discussion from being dry is to talk about things they're really interested in. And nobody's interested in anything quite so much as their own portfolio. So to initiate discussions, any of your listeners or viewers who want to can go to a website, sprottusa.com/rankings. Enter your natural resource stocks on the list there. By the way, please no pot stocks, please no technology stocks, please no digital currencies, just resource stocks. And I'll personally rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues where I think my comments might have some value. And for listeners who care, I'll include a copy of the Barron's Gold Mining Index, which is the longest running and most inclusive gold mining index that I'm aware of, and a 100-year commodity chart, which will show just how cheap industrial commodities are relative to other asset classes going back through 100 years of history. Despite the fact that I'm changing my roles at Sprott, I will still be very active in various things, including the SprottuSA.com rankings /rankings service.
Yeah, and I really think that's a great opportunity our viewers have. SprottUSA.com/rankings to really get that personal touch, right? Of you really ranking their portfolio. So once again, Rick Rule, thank you so much for your time.
Always a pleasure, Elijah. Thank you. And say hi to all the folks at Miles Franklin for me.
Will do. God bless. Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.